Ahoy there trader, by the end of this video you will know a complete swing trading strategy. I'll be revealing one of my most profitable money making blueprints in just a moment. Now I know you've heard of buy the dip, but almost every trader I know, new or experienced, gets this wrong. So stay tuned, I'm going to be showing you exactly how to find a consistently buyable dip and tap into a literal river of money using a simple 4-rule system that I'll be explaining in just a moment. This is the first of 6 patterns that I teach all my traders. It works. I'm going to prove it to you in just a moment. It can be replicated regardless of your experience level. So if you're ready to plug into a proven, tried and tested swing trading strategy that gets results, I know it gets results, it can be replicated because my students tell me that they get their success and their own results with this system. Ahoy there trader, my name is Philip Newton. I've been trading this system for the past 28 years. It works on futures, forex, ETFs, crypto if that's your thing. It works on stocks and stock options, which is my thing. Basically anything that's liquid and trends. Let's look at the number 1 swing trading strategy in my arsenal. It's a complete instant expert blueprint that I wish I had when I started out back in the 90s. It would certainly have accelerated my results, as I'm sure it's going to do for you right now. Now, before we dive into the charts in detail, let's take a look at what swing trading is. But let me start off by saying what it isn't. This isn't a day trading system. You won't have to be sat in front of the charts all day, every day, watching every minute detail. Neither is this investing. You won't have to wait years to see results. It's a happy in-between. Now, this is a method of trading or swing trading that profits from an upswing and a downswing in market movements. I'm going to explain the exact step-by-step details in just a moment. It's backed by irrefutable data and decades of trading experience. I've designed my strategy to pay me on average in about every 30 to 45 days. And this is one of those areas that you can speed things up or slow things down depending on your personal situation. This is how I want, which gives me plenty of free time to do other things without being glued to the charts. So you get all of the benefits of passive investing, yet all of the benefits of active trading. The way that I do it means that you don't need to be glued to the charts all day, and I can just check in 2 or 3 times per week. And when you learn the system, it takes about 10 to 20 minutes. And as you're learning the system, it may take you 20 to 30 minutes a day, 2 to 3 times a week. Obviously, it gives me complete freedom to enjoy my life without being glued to the charts every day and basically being like a mindless zombie flicking through chart after chart. So if that sounds good, then let's go and look at the rules, the tools and the charts that you need to learn my number 1 swing trading strategy. Now there's some links in the description next to this video that will help you with some of the resources that are mentioned and some of the stock lists that I'll talk about also in just a moment. Now I'm sure you've all heard of buy the dip, BTFD. But almost every trader that I know gets this wrong. Now, what I'm looking for specifically, and from now onwards, is a buyable dip in the context of an uptrend. Now, this is a far more profitable way of doing it than buying any down day, calling it a dip, and hoping it goes high, which is what most people do. Now, by looking for a buyable dip, this allows me to tap into a river of money, or the trend for want of a better description. And I'm looking to try and get swept away along with the profit currents. So let's look at my chart setup. I use daily charts, as it gives me plenty of time to assess and profit from the swings. I also use moving averages as my tool of choice. Simple moving average is good enough for me. Don't stress over the calculations. Now I use a 20, 50 and 200 period moving average on the daily charts. Just a simple moving average. There is nothing magical about the tool or the settings. What it does allow me to do is have a mechanical reference to evaluate the strategy and the setups so that I can tap into that river of money or the trend. I can also build very specific rules to help me find that river of money. Now, when you do, there is no discretion. We can all agree that an event has happened. It becomes a statement. And this is what makes it repeatable, replicatable for everyone, regardless of your knowledge or experience. So let's look at trend phases. The moving averages allow me a structured mechanical assessment, and I typically categorize where price is in relation to those moving averages. The most important one for me is what I refer to as a phase 3 trend, and this is where price is above all 3 moving averages. This is the part of the river of money that I want to profit from. The next phase that I want to identify is resting, phase 2 resting, and that's when price comes between the moving averages. And the third and final is phase 1. And for the purpose of this strategy in this video, I'm just going to ignore it. It's when price is below all the moving averages, but they're still in a bullish state. So the average prices are pointing upwards, for example, but price has dropped below the averages. So I'm just going to ignore that. So the trend for me is like a river of money, and that's what we're trying to tap into. So how do we do that? I'm going to use a phase 2 resting as my buyable dip. So that's when price is between the moving averages, and this is what I'm interested in. All those times where price has moved between the averages, above the 200 but below either the 20 or the 50, is a buyable dip. I can ignore all the down days or down movements that do not move between the average prices. So I'm looking for a phase 2 resting, and this is what I'm going to define as a buyable dip. What I'm hoping to then do is profit as it moves from a phase 2 and move back into a phase 3 and continue its trending movements. And I've highlighted the chart there visually so you can see what we're planning on doing. We want to see it move from a phase 2 into a phase 3 so that we can profit. And this, for me, is what a buyable dip in an uptrend looks like. Really, really simple. So wait for a phase 2 when price comes between the averages so that we can profit from a phase 3 when it's above all 3 moving averages. And just in case you were wondering, these rules that I've just described to you can be plugged into an algorithm, which is a fancy way of saying, if this, then do that. And I can look back over the historical data and the mechanical application of tapping into this river of money. I can see what would have happened. This is what a positive expectancy strategy looks like. If I did those rules over the last 23 years, then I'm expecting an on average positive return. And the results look like this because I only want to trade a chart that has a favorable backtest, and I can ignore the rest. And this is what produces my results and, of course, all my students' results. It's repeatable and replicatable, and I know this because they continually tell me that it's repeatable and replicatable because they're seeing their own successes. Got it? Perfect. So let's look at the classic trend trading rules in even more detail now that you've got the concept. A mechanical trend setup is the first thing I'm looking for. This is when the 50-period moving average is above the 200-period moving average. This is what I will define as a mechanical bullish direction. Then I'm going to wait 20 days. Because what I'm trying to avoid is those false starts. So it lets the trend get established. And when we've got a good trend, it can last for weeks or even months, sometimes even years. So don't worry about missing the trade or the trend. There's often plenty of opportunities throughout a movement. But this is the mechanical trend setup I'm looking for. The 50 above the 200, wait 20 days, and then we can start looking for a buyable dip in the mechanical trend. So what is a buyable dip? We've already established what the uptrend looks like, but we're then going to wait for price to pull back into the 20 or the 50. It can go to do the 20 first, then the 50. So it's one or the other. And this is what I will define as a buyable dip. Now, this is not an automatic buy, but this is what my buyable dip looks like, and I'm then waiting for it to move back into a phase 3 trend. So what will trigger me into that is a planned entry. I'm going to enter on what I define as a trigger bar. So a trigger bar is the first bar to touch the 20 moving average or the 50-period moving average. When I've identified that, my entry will be above the high of the trigger bar. Let's go and take a look at what that looks like. So on the chart we have over at the bottom left, the average prices have crossed over, and in the blue box, the first blue box on the left, we can see that that's happened. That's what that thick dotted vertical line is highlighting. Step 1, the 50 crosses above the 200. Then I'm going to wait 20 days to help me avoid false starts and whipsaws. After that, the third part is wait for price to come back between the moving averages. So all these solid black lines are all the times where price has moved and touched either the 20 or the 50 period moving average. So we're looking for rallies away from the phase 3 trend and then to come back between the moving averages. And the first bar to touch the 20 or the 50 period moving average is my trigger bar to help me with my planned entry. The same trigger bar can also be used for trade management. So I'm looking to try and profit between the trigger bars. Now those rules can create an algorithm. An algorithm can be tested. So I've just changed the background of this chart and you can just about see the little blue triangles and the dotted blue lines and the dotted red lines. This is an automated strategy algorithm because again, I can plug those rules that I've just explained to you into a computer program that says when these conditions are met, place a trade. And with those rules, I can look back in this case over the last 23 years since 1999 and say what would have happened. If I traded this way since then, what would have happened? And all I'm trying to figure out is if I've got a positive expectancy and a nice steady equity curve, which you can see at the right hand side of the chart there, that white chart with the blue arrow, that's saying that it's making money on average. And all I'm trying to forecast is, will something similar happen over the next 30 to 45 days? Because that's when I want to get paid. So this is what a positive expectancy strategy looks like. And in case you're wondering if I've just cherry-picked a random chart where this happens to work, then this works on S&P 500, Apple, Marriott, Nvidia, Starbucks, Wynn, Resorts, Monster, FedEx, Netflix. I can pick any number of charts which have a more than 20-year back-tested and favorable expectation. So this is a consistent strategy that works on a regular basis on a lot of opportunities. So quick final thoughts. I only want to trade a small number of the very best stocks. There's a link in the description that will tell you which stocks that I'm currently trading. Now, production line trading for me is perfect for a portfolio style of trading. And I need to trade my very best stocks. For example, the top 25 stocks is an absolute minimum as a portfolio because no one knows what's going to happen next. No one can forecast the future. No one. But what I do know is that on average, I expect it to work on my top 25 stocks. As such, I need to trade every setup on those top performing stocks so that I can emulate this performance. This is what the data tells me and gets results like this. And it's what gets my student results because this is a mechanical, repeatable process. So you have no excuses to make swing trading work for you and tap into a literal river of money using 4 simple rules that I've just outlined for you. This is my most profitable pattern and it's just one of the 6 patterns that I teach all my traders, which makes up my production line trading system. So if you want to go faster and work more closely with me, there's some details in the description below that will take you to learn a little bit more about what I do, and then you can decide if what I do is right for you. And if it's not, that's cool. Send me a message. I'll always point you off in the right direction. And until then, happy trading.